on to the Nigerian market update, the all-share index went up 2.4%, closing at 37,350.53. The year-to-date performance of the index stands at 32.3%. Total value traded went down 32% to 3.9 billion naira, while total volume traded went down 15% to 364 million units. Some of the gainers: Dangote Cement, Cadbury, GlaxoSmithKline, Nigerian Breweries, WAPCO. Losers: Unilever, Okomo Oil, PZ Mobile. Now joining us from the trading floor of the Nigerian Stock Exchange to discuss the equities market is Sam Ineh, and he's a stockbroker from TFS Securities and Investments. Sam, it's great to have you on the show. Now, of course, we have the results out from International Breweries' 15-month results. We saw revenue up, profit after tax has gone up as well, which is great. But the company declared a dividend of 25 kobo per share, which is a pretty low dividend yield. So, first of all, your thoughts on the results?
Yeah, looking at the result of the International Breweries, we might say the absolute dividend is a bit disappointing if you do the calculation of the dividend yield. That gives you something below 1%. But if we take into cognizance that the company is presently trading above its fair value and we calculate the dividend yield using its fair value, we come to a dividend yield which is close to what Nigerian Breweries is at the moment. So looking at the dividend payout ratio, which is about 35%, because the diluted earning per share is about 71 kobo, I think the dividend payout it's okay. And I guess the market sees in this area going by the fact that the price did not really drop today. You know, the price stabilized at 2.8, and we also look at it that the average trading volume was even surpassed today. Average trading volume is about 1.26 million. Today's trading volume is about 1.3 million in good number of deals. So I think the company had a good breath today, and I guess investors are comfortable with the result as declared by the management of the company.
And that stock has gone up 73% this year, but as you said, it traded flat today. So going into next week, do you expect the market to react positively to the growth in the company's profit or negatively to the low dividend yield?
Pardon me, can you just take that again?
As we go into next week, it would be great to have your thoughts on the market reaction, whether we're going to see a positive reaction because, of course, they have, good profit numbers out, or will it be negative because of the low dividend yield?
Okay, talking about Nigerian breweries, going
International breweries.
About international breweries.
Yes.
Yeah, I expect that the price will probably stabilize if for any reason there is profit-taking activities, because if I were an investor in Nigerian breweries, this is a good time for me to take my profits, and smile to the banks. If many people take in this same area, we expect a slight dip in the price of the shares. It's 50-day simple moving average is about 22.63 thereabout. If the price should dip, I expect it to stabilize at that moving average, and I think that will be a good base for the company's share price. So looking into the week, I will be surprised if the price should come down. It will just be, like I said, profit-taking activities. It does not shake the fundamentals of the company, and I expect that the price of the stock will bounce back, as people begin to feel that the price has dipped low and people are coming in to take advantage of the low price.
Let's move on to results from John Holt. We saw profit after tax and revenue go up. Now, unlike many of the stocks on the all-share index, which have seen gains this year, that stock has actually gone down 53% year to date. So why do you think we're seeing losses in that stock this year?
John Holt is a company classified in the conglomerate sector, which means they do a whole number of businesses related and not related. The year end is September, and the results came out this month, about 8-9 months gap. That is past due, and I guess investors were a bit wary. That alone will have induced negative market sentiment and may have been one of the chief reasons why the company's share price has been tumbling down since the beginning of the year. Having said that, we know that this is the market, and the law of demand and supply still, come into play. The 50-day moving average for John Hole is about 1.62, and that's about where the stock is presently trading. So I expect that if for any reason the price should break the moving average, the bulls will come in, want to take advantage of the low price, and that might cause a little bit of appreciation. But I don't see it trading at too high a price, because as we speak, the fundamentals requires a lot of improvement, because we noted that the net assets for the company did fall, and they have a lot to do concerning their profitability.
I'd like to touch on the full-year results from aluminium extrusion industries. Now, of course, the stock is not a very active stock, but the company did declare dividend of 50 kobo per share, which is a dividend yield of 4.7. So, of course, holders in that stock have been rewarded. And knowing how important dividend declarations are in moving the market, do you think we'll start to see activity in that stock?
Precisely. Good dividend payout by companies affect the market price positively, but I don't think we are going to see much of activities spiking up in aluminum extrusion. I think it will just remain relatively on the low side for some time to come.
Let's talk about the index, because in the past 2 trading sessions, we saw the index reversing some gains that we've seen over the week, largely due to significant losses in Dangote Cement. However, today, Dangote Cement did gain 7.7%, which moved the index back up above that 37,000 mark. So do you expect profit taking to extend into next week, or do you anticipate more gains?
I expect profit-taking activities to take hold of the market, and by that I'm saying the bears might likely take control of the market going into next week. So I expect a slight dip in the all-share index to say fall below the 37,000 mark. But that is not to say I'm talking about a bubble. Not, far from that. It's simply going to be the depression in prices as a result of profit-taking activities, because basically the market comes down to the basic supply and demand forces. The market has a good breadth. The market has a good breadth, so I see it's picking up. And if you look at it, basically, okay, all right.
Well, I mean, I was just going to mention, of course, the index went up 35% in 2012. So far this year, it's up 32%, which is already close, of course, to that 35% mark, which is good news for investors. Exactly. But how much more gains do you think we can expect to see as we move into the second half of the year?
I expect to see gains in stocks like Transcorp, like Owando, and I expect a bounce back in the share price of First Bank holdings. I basically am optimistic that the all-share index will close the year close to 39,000-40,000.
I mean, you did mention Owando and Transcorp there, and those are 2 companies that have had rights issues. And of course, Owando's rights issue was oversubscribed. Yes. Transcorp's rights issue is now ongoing, and there's talk of course, there are upcoming offers from Wema, Skybank, Diamond, Wapik. So as the market begins to gradually witness the turnout of IPOs and rights issues in 2013, do you expect that retail investors who appeared cautious till now will have a rethink?
Yeah, I do. Basically, why the market sentiment of fear may have taken hold of the retail investors is because of the price crash that happened in 2008. And if you look at that, we're not immune to the global economic downturn. And as we speak, there's a lot of stimulus program in US, in UK, in Japan, and this is stimulating the economy. And being part of the global village, some of these funds are flowing into the country and actually helps our all-share index to pick up from January to date. So I think the retail investors are getting good enlightenment from the management of the stock exchange. They organized a retail forum not too long ago, and once their knowledge increases, I think it will take care of the market sentiment of fear, and they'll be able to appropriately, giving good advice from their professional managers, appropriately take positions in some of these stocks that are still trading below the par value, like
Sam, let's leave it there.
Yeah.
Let's leave it there, Sam. Thanks for coming on the